I'm Claire Wasserman. I'm the founder of Ladies Get Paid, which if you don't know it, well, you do know it because you signed up for this class. But in short, we are a network and an educational platform that helps women basically make more money, whether it's negotiating at their jobs, getting new jobs, and of course, financial advancement. So COVID hit. We'd never done any kind of education before about loans and grants, which we probably should have, but now it's obviously more urgent than ever. It's new to me, so I am so grateful to people like Meredith, who for a living knows how to do these things. And this is good for anybody who has a small business or is thinking about a business. So I think that's a lot of you, almost 400 signed up, really great questions. And anybody who's just joining now, please jump into the chat. As you ask questions, I encourage you. So I am going to be asking Meredith things that were submitted beforehand, but I will be checking. I'll be checking what you say, guys. So if you have something you want to speak up about, I'll see it. And there might also be other people on the webinar who have answers to you. So please, everybody share with each other. So an overview of what we're going to be talking about today. It's just generally, what business owners need to know about growth, grants and loans, the overview of the landscape, and then obviously getting a little bit more specific with COVID. How do you get started? Eligibility, using the loan, right? We're going to talk a little bit here about forgiveness. That's the big question. And business advice, resources. Obviously, Fundera is a resource you can go to. Meredith is a treasure trove of information. She's actually the editor-in-chief of, I wouldn't call it a blog. I think I'd call it more of a magazine. Meredith, this is fundera.com/blog. You have so much wonderful editorial there about lots of different things as it comes to small businesses. And yeah, Meredith Wood, she is our guest today. She's the vice president at Fundera, which is a financial resource for small businesses. And I am just so thrilled that she's here with us today. I see Anthony Scarpacci, so he works at Fundera, which is awesome to see you join. And enough about me. The preamble is done. So Meredith, can you just give us a quick overview of the PPP program and how to get it, and if there are any other loans and grants that we should be aware of that are related to COVID?
Absolutely. So the Paycheck Protection Program was something that was initially conceived to help give business owners that were affected by COVID some cash in order to keep their business open, with a heavy emphasis on keeping people employed. And so there is a direct connection between your payroll and the loan itself. It's evolved. I would say that in an effort to get it launched in early April, there was definitely ways it could have been improved. There was a first round in which the capital went very quickly. And then there was a second round that came about, and I would say by the time the second round hit, everybody was a bit more prepared, lenders especially, and that meant that we also changes have happened to the loan itself, how you can get it forgiven, etc. So in short, it is a loan that is equivalent to 2.5x your average monthly payroll, which is a definition that can be very confusing for people because it's over different periods of time based on when your business was started. A lot of people say, oh, I had more employees in 2020 than I did 2019, but they're looking at 2019 numbers to verify my average monthly payroll. Or what if I'm a freelancer or a sole proprietor and I am my only person on payroll? How does that apply? I would say as you go through the process, at this point in time, depending on who you are, your questions are answered with whomever you choose to work with. In the case if you are a freelancer or sole prop, you would be using your 1040 or Schedule C to verify your income from the previous years, and it would be equal to 2.5x. In that regard, this money is then given whichever lender you choose to work with. You get approved, you're given that money. And then this is where the period starts where you have to start using the money. And based on the use cases and how you choose to use that money, you can be eligible to get up to 100% of the loan forgiven. This is something else that has evolved since the launch of the program. They've changed the forgiveness rules to be a lot more flexible in terms of how long you have to utilize that money, what percent needs to go to payroll. It's also a very, very complex topic. And because everybody's situation is a little bit unique, like, does this count as, I mean, it's pretty clear what counts as payroll, but how do I prove that if I'm a sole prop? There's also the question of things that are eligible, like rent and utilities, what's classified as utilities. So I am not the expert in PPP forgiveness down to those minute details. We actually have elected somebody at Fundera to be that person. And we have a webinar now. We are going bi-weekly, now we're at once a week, that you can just hop on like this and ask Justin questions based on your unique situation, and we'll get them best answered, so you know how you can ensure you can get as close to 100% forgiveness as possible on that. That being said, if you're not eligible, or for whatever reason you're not able to get all of their forgiveness, it's still the best interest rate you'll probably ever see on a business loan with very, very long terms. So I highly recommend the program if you have not looked into it. I will say that it is closing on June 30th. So I would hop off this call and go take a look at it. If it is something you're considering, do not wait any longer.
Okay. Well, maybe stay on the call. Well, it's up to you.
At the end of this webinar.
But you know what? You will get the recording. So actually, go. Everybody get off. Will you send me a link to that webinar you have upcoming? We'll include it in the email. Great. Okay. Somebody sent in a question where they said, I've already applied and I did receive PPP and an EIDL, which, by the way, I'm going to have you tell me what that acronym is. But she said, it is not enough to help my business survive. Are there any other SBA options I haven't explored? So first, give us the acronym here. What is EIDL?
So EIDL stands for an Economic Injury Disaster Loan, which is a program that has existed pre-COVID. It's one of the SBA's various programs. It has become most popular during COVID. It's really historically, I've seen it come into play more often with natural disasters, in the sense of a hurricane hits a particular community, and then the SBA has a portion of its site which it says, this, if you are a business owner in this community and you can show you were affected by this disaster, you are eligible to apply for this program. It's not a grant, it is a loan. It does have very, very good terms. I think it's a 3.75% interest rate over a 30-year term, which, again, I'll say this at some point in the webinar, is very good terms for business lending, and I'll provide more perspective there. For COVID, though, going back to, again, we tried to do a lot quickly, and things have gotten a bit better since we've had more time to sort of catch up to it. EIDL was sort of the first program that got attention, which was like 100% of the United States is considered a disaster zone, in the sense that you can apply for this program. And in doing so, a bunch of people applied, and then they added in you can get a portion of it as a grant. And then they changed the amount which you could get as a grant based on your size and employees. So if you've applied, you've probably gotten a portion of that as a grant. And that is something you do not have to pay back. That's money they send you. And then they ask, do you want to accept this loan with these terms to take on the actual EIDL? So in this particular scenario, the first thing I would say is, if you haven't taken on the actual loan portion of the EIDL, I would highly consider it, because it is going to be your best debt financing vehicle at this moment in time. Regarding other programs, the SBA specifically, they do have their sort of flagship product, which is a 7A loan. And that is traditionally, if you've ever gone to the bank and you've said, I want to apply for an SBA loan, that's most likely what you're applying for. And that is very much a traditional term loan. It has varying payback lengths, but can be up to about 25 years. Interest rates are based on market, but I think right now, I don't know them off the top of my head, but we're looking at like 6 to 7%, which again is very affordable for business financing. I know it might be sticker shock if you have a mortgage or student loans to see rates like that, but business lending does have much higher rates. And so that program is actively lending, and it's become even more, I would say, attractive for borrowers during this time. It is also something I'm seeing in the inverse, which is the lenders are trying to figure out how to underwrite right now, because nobody's business looks normal. Everybody's past 3 months is not what it was the months prior. And so that's sort of what we're seeing. So I would at least consider that program. It can be a bit intensive in terms of paperwork, but it's the first thing I recommend to every business owner I know when they look at debt financing is, have you applied for an SBA 7A loan? Now, your other next best source and what we're seeing, and Claire, I have a link I'll send here as well. We've tried to do a good job of compiling when we see things happening on the state or local level related to COVID relief, whether it be grant or lending programs. And so we'll shoot that your way. You could take a look to see if there's if your region applies there. Also, if you have worked with somebody and you see them not on the list, let us know. That'll be helpful for other entrepreneurs. And I would say you could also just look for local programs, usually through your government on either the city or state level as well, has been the best thing we've seen.
Great. 2 questions for you that just came in about the date of June 30th. So Anna says you need to file by June 30th, even if the loans are extended.
I believe this is regarding for forgiveness, and the answer is no. And I'm not going to provide more information there, but to hop on with Justin, because I don't want to misquote myself here. But we did, the big kicker that changed recently was that the period was extended from the 8 weeks to 24 weeks. And in order to show them that you've spent the money correctly for that period of time, you have to take that period of time to spend the money. Now, this may have been, do you need to apply by June 30th? Which the answer is yes. And I would say I would actually apply earlier. Like, don't sit on this one at all, just because there's probably going to be a final flux of people coming in last minute. Lenders may get overwhelmed. What I'm seeing is at this point, lenders, they know what they're doing. And so it's become a lot more automated in some case, but if for whatever reason you don't complete a portion of the application right, it gets kicked to what's considered like manual underwriting, you could get way slowed down. So I would move quickly on applying and ensure when you're completing the application, you are certain you're inputting the right information, and do your research if something is not clear to you, if it's the right documents, if you're interpreting this correctly in terms of what it's asking, so on and so forth.
Okay, great. Natalie has a question, a bit detailed, and if you're not quite sure of the answer, then we'll send folks links. She said, if I decide not to accept the EIDL, and she said, and solely keep the EIDG, which I'm going to have you tell us what that is, do I need to do anything to let the SBA know that I will not be pursuing the loan? And then the second question from her is, if PPP is fully forgiven, will they deduct the $10,000 IDL advance / grant from the forgive amount? Yay, math and acronyms. So glad you're
well, shout out to Natalie for creating a new acronym, because EIDG I've never heard before, but I do know what she's talking about, which is the Economic Injury Disaster Grant, which is the point of when you applied for the EIDL, there was a portion of it that was grant specific. And so my guess is that's what people, I love it. I should have thought of it myself. So if you decide to just keep the grant and not pursue the loan, that's fine. In your portal that the SBA is using to alert you on all this, you can just simply deny that you're going to actually take on the financing portion of it. They're not going to like automatically send money to your account out of nowhere and then you're held to it. So that's what I would handle, all that within your portal. And then the second part is there was a lot of confusion around the PPP program, and if you had already received an EIDL, you needed to account for that in your PPP loan amount, and then you would essentially be refinancing your EIDL into your PPP loan. That applied to so few people because you had to have received the funds and been committed to that loan prior to this. So your grant, your EIDG, is not related at all to the PPP loan if it was not counted in the actual PPP loan amount and approved, and you were told you'd have to refinance into it. So again, just to like a fun story at Fundera, when PPP was at its prime, every member of our team was processing applications to try to get as many people through as possible, myself included. And I did not have a single application I looked at the entire time that I was there that actually met the date of when you had to receive the EIDL by in order to get it refinanced, because most people didn't even know what an EIDL was at that time. I think at the time it was like an early April deadline.
Let's talk about submitting evidence, and then I'm gonna go from the chat to the questions that I curated before. So is the 1040 enough evidence to submit as proof of income for the PPP. Any other, when we're talking about applying, like things that we need to show besides 1040, what do you recommend?
So this depends on your business and your business entity. So 1040 is enough if you are an independent contractor or if you're a sole proprietor. I think it's line 31 they're using is like sort of your net profit to verify that. And that's enough for that. So in Ashley's case, she's a sole prop. So that does apply there. You're good to go. If you are an LLC, a corp, S corp, maybe you pay, like you do have some W-2 employees, but you yourself are getting paid through a Schedule C, you would want to submit, you're not getting paid through your Schedule C. That's how you're sort of proving your own income. You would submit both forms. You would submit your Schedule C, and you in terms of verifying payroll, there's a couple of things that work here. There's your 940s or there's your 941s are the two best from 2019. In addition to that, anything that if you use a payroll processor that they can use to help break out exactly what you've paid per person. There's sites or services like Gusto and ADP and Paychex have actually prepared Ppp reports, which are really helpful because you can only claim up to a certain amount per employee, which is $100,000 annually cash compensation. So if you have employees who make more than that, it helps you kind of configure that amount so you can see if I have 10 employees and a couple of them make more than that, this helps figure them only up to that $100,000 mark. And similarly for yourself, if you are a sole prop or independent contractor who made more than $100,000 in 2019, no, you'll only be able to claim up to $100,000 in income.
I love this question also from Ashley. How soon can we expect funds to come through for the PPP if we are approved? By the way, I'm going to just say Triple P.
We need a new name. It's plagued me this whole time.
Triple P. When can we get our money? When do you think?
So it honestly depends on the lender. And just to be completely honest, I've seen same day in some cases. I've seen it take a week in some cases. I will just say that, again, going back to when this program started, it needed some help. And there were instances where I'm not gonna lie, it took some people a month and those were very unique circumstances. Some people signed up for more than they could take on in terms of loan volume and then were sent in a place where they were trying to fulfill that. I think we're very much out of the woods there. But going back to, I am a bit worried about this last minute surge and lenders being able to process in time. And so I would say that's why it's so important that you do your application diligently, because if it can get through an automated underwriting process, it's more likely to go faster, get that money quicker. I'm happy to provide a recommendation, like using a service like Fundera. I don't mean to just pitch our services, but this is why we exist.
Yeah.
We've worked with multiple PPP lenders at any point in time during this process. And I kind of feel like we just are switching our targets constantly based on who we know is processing fastest and where people are most likely to have the success. And so we have a specific, in this point in time, we had a lender we were working with primarily, and they got kind of backed up. And so we're trying to funnel people into another lender right now who has much more bandwidth. But our job and what we really do is audit and package those applications so you're less likely to run into issues once you hit the lender. Is the average payroll calculated correctly? Do you have the supporting documentation that verifies that? If you're trying to claim things like healthcare, et cetera, do you have the proper documentation that shows that is what you spent on those healthcare expenses in 2019, as well as things like state and local taxes, which don't show up on the 940s and the 941s. What documentation do we have to verify that? And that's the role we play in all of this. There's also other services that play a similar role. And you may have a relationship with certain companies, like Square is a good example that's done really well in PPP. If you use them for any processing, they could be a really good option for you, that it might be a bit faster because they have some of your information already. So I think you'll find that if you do a little bit of research, the internet has done a good job of highlighting who's doing good right now with this program. So I definitely would do a bit of due diligence. And I should point this out, if you work with a local bank, you should also give them a shout if you haven't already. Because at this point, they're probably have a little bit more bandwidth than they did at the launch of the program.
Do you increase your chances if you apply to multiple lenders? And then if you do, what happens next? If you get approved by one, do you have to inform the other folks?
So you do increase your chances. Again, it's just about who can look at your file fastest and underwrite it fastest. And so that kind of allows you to put a couple eggs out there, not necessarily try to understand somebody's bandwidth. What happens is that legally you have to agree that you will only accept one of the loans. When you apply, you are submitted to a system by the SBA called E-Tran, where it kind of secures a number for you. So what you will actually find is that lenders are going to get to a place where if they try to submit you, they'll get blocked anyways. The rare circumstances we see are sometimes if we have business owners that have multiple entities and some weird things get caught up there, you can apply with both entities, but as anything is prone to mistakes here and there, that's probably the biggest time we've seen a bit of an issue, but it's never truly an issue because the person just doesn't accept multiple loans. I would say that if you do apply and someone says you were denied by E-Tran, it means you do have, somebody has an E-Tran number for you somewhere and you were approved somewhere. And if you're unsure where, go reach out to your local SBA office. They've been able to have the fastest turnaround to tell you which lender is holding your E-Tran number right now. And I say this only because some people have applied places where people are holding their E-Tran numbers and they don't know it, but they're not moving on funding them. And so you may want to ask that person to release your E-Tran number so you can move forward with the lender moving faster.
Yeah, the first time around we went with our bank, which was Chase. We did not hear back. We posted on LinkedIn. We said, anybody applying through a different bank, suggestions. Immediately somebody responded and said, let me hook you up with East West Bank. Never heard of them. Now I definitely know them because they got us the money. So, hey, and then we got an email finally back from Chase. And I think it was, I don't know if they approved us. I think it was more like, hey, are you still interested in this loan? Mm-hmm. Little too late here. So I think, posting on LinkedIn, I mean, obviously you'll follow up with Fundera and other resources, but guys, LinkedIn was a super help for us in any kind of business questions that we have. And the people who helped us, we didn't even know them. I mean, I guess we sort of did through LinkedIn. Question about credit. We got a fair number of people who submitted that. Does credit affect when you apply to a loan? Like if you don't have good credit, does that impact or factor into this loan application?
Yeah, I would actually say I'm very glad there were some questions around this because I find that the most surprising thing for business owners is understanding how much their personal credit affects their business financing options. So I'll take one step back, and I've hinted this at a couple times when I say that's a really good interest rate for business lending. Another thing that shocks people when they start looking at debt specifically as a vehicle for financing their business or the interest rates. They are much more expensive than what you're seeing on the consumer side for things like a mortgage, things like car, which think about what they have in common. There's a physical asset attached to that thing. So if you do not pay back your loan, guess what? There's still something that can be claimed in order for the lender to recoup their costs. So you can imagine as with a business, it's very difficult to have that sort of one-to-one comparison, especially think about, I know we have some sole props in here. We probably have some people who are like consultants and like, I have an LLC on the side and my assets are like me, like my head, my brain, like you can't take that from me. There's no way to like give that to you if I don't pay a loan. Right. And like, I don't know, you could take my computer and my QuickBooks software subscription. Like I don't really have much physical that I could give you if I'm unable to pay a loan. And so that's one, why the interest rates tend to be higher. And then two, why your personal credit score becomes so important, because until you're a very, very large business, just to be frank, and I guess I'm using large, thinking more like a couple hundreds of employees, millions of dollars in revenue, that size, which is still in some cases maybe quantified as a small business by the SBA, which is a whole other conversation. But if you're under 100 employees, under $5 to $10 million in revenue, maybe even a little more than that, your personal credit will come into play. And it's because it's one of the only things the lender has to reference to really understand how you, the business owner, are going to handle debt, because you are the business. That's what a small business is. So they're going to look at your personal credit history and try to understand that in a way that's matters so much, because again, going back to this is not, and think about how your personal credit impacts your mortgage, for example. And again, the mortgage, you have the house. The business, you don't have that. You may be in manufacturing, you may have some sort of inventory, and there are financing options where you can use that collateral to help collateralize the loan. And then guess what happens? Interest rates tend to be a little bit better. The credit is less important, but when you sort of start to connect those things, you understand why. So that's one of the first things that I say to new business owners is like, whatever your history is with your personal credit, it just became increasingly important. Even if you say to yourself, I'm never going to take on debt, I never want a loan, I'm supportive of that, but you want to be prepared in case you do. Look what just happened to all of us 3 months ago. I'm sure some people were in a place where they were considering debt for the first time, which is very scary, but you want to be have your best foot forward. So if your personal credit is not strong, now's the time to start investing in it. I mean, obviously it has many benefits beyond business financing, but it will impact everything you're eligible for.
Okay, so let's say I don't have good credit and I'm not positive that I'm going to get like a big loan here. Should I now apply for a smaller loan? Will that increase the chances that I might get it?
So, another thing that's interesting about loan amount is that I've found it's less about what you want and more about what you're eligible for.
Mm-hmm.
And like lenders will come back and say, this is what we would be willing to lend you. It's like that, how much house can you afford mentality. It's kind of lenders are thinking the same thing. There's like, here's what we would give you. I will say this, that a red flag for lenders is for someone to come in making, $10,000 a year and has a 500 credit score and asks for $1 million. Like that sort of mismatch expectations scares lenders off, because it makes them just think, I can't speak for lenders, but if I had to imagine, it's just that this person's expectations are so off, we will never be able to find a successful arrangement. So I would be realistic about what you can afford. To your point of how your credit affects the loan amount. Yes, if you have worse credit, will be smaller loan amounts, but it'll mainly be the interest rates that are much higher. So both those things will be intertwined. In general, the other thing is in building your credit, as much credit opportunities as you can establish. So finding someone who will extend you credit, even if you may not need it, but you're using that opportunity to pay it back and show you are in fact somebody who can use debt well and responsibly, is one way to also build credit, which I think is a separate conversation, but in that scenario, it might make sense. So I'll leave it at that, but I would think about loan about not so much about much more about like what you can afford and what will look reasonable to a lender.
There was a really great question that was asked about, can you talk about the SBA 7A loan specifically for startups? The second part of the question is quite relevant to what we just talked about, which is what are the chances of getting it? What makes you look viable for lenders?
Mm-hmm. Mm-hmm. So I'm a bit disappointed, and I wish I could provide better information here. I don't know this program really well, and I don't know anybody who's had success with it, which I don't want that to deter anyone from exploring it. I'm a big fan of all of the SBA programs, and I think every business owner that's looking for debt financing should start there. I think that, so when we do a ton of SBA loans, and they do tend to be established businesses, they can be, in my opinion, they can be a little bit hard to qualify for, knowing like just what I see come through in the average business owner. Generally higher credit, often cases some profitability is required. So there's just some things there that maybe not every business owner has attained. So I don't know a lot about the program. I do think that they are loans that tend to be smaller. I think they're up to like $50,000 a year. Interest rates are about the same as 7A. And and beyond that, I'm not quite sure. I know that a lot of people have had success with it's funny to hear your story, Claire, about going from Chase to this like community bank. This is another, as a small business, I would bank with a community bank. I would, depending on what you are. I'm also a big fan of like the digital banks. If you're like a sole prop freelancer, like the Aslos and so on and so forth, just because it's like bare bones, exactly what you need, no fees. That's sort of, I feel like, a different business model. But if you have, for anyone who doesn't fit in that bucket, I would go to a community bank, because a lot of them do have some of these programs that are much more community oriented for the SBA. And that's where I would start. And I apologize, I can't provide a better answer on this one.
No worries. And I was thinking about companies that either started just before COVID, or don't make much money, or don't have that many employees, and they don't have big salaries that they're paying. I mean, are they eligible for these loans? Or even businesses that started right after COVID hit? You know, what do you prove if you don't have much money?
So for PPP specifically, you had to have started operating, I think it was in January. So they're looking at January and February of 2020 if you were a new business. So if you started in March, it's kind of like a tough luck, because they don't have anything to look at. I think that some of the grants could be a really viable option, because you obviously can show impact. And so you should look at the EIDL, because it's much more evaluating, was your business impacted, versus using the configurations PPP is. And I would look at some of the those local resources I mentioned earlier. But my heart goes out to those people, because I think that is actually the toughest position you could have been in, was to launch in March of 2020.
Yeah. And I appreciate your honesty there.
Yeah.
Where sometimes this is just shitty, or even if you get the loan or the grant, it's still shitty and hard. But that's why having a community is good, because we can commiserate.
Yeah.
You may have talked about this before, but I'm still getting questions about it. So I want to get super basic here. Grants and loans. I'm going to just say, what's the difference? Even though I know, but what's the difference? And what are we all eligible for here? What are the loans and grants that we should be looking at? And then microloans. Somebody asked about that.
Yeah. So point blank, loans are money somebody gives you that you have to pay back, and with interest. And very rare cases, like maybe you wouldn't have to pay interest, and that's if it's a friends and family loan and they're literally just saying, pay me back the money. And then a grant is money that you're given and you don't have to pay back. Sometimes the grant comes with specific requirements around, like, we want to see it invested this way, or to have you do this thing. I would say less often than not in this kind of scenario with grants. But so that's sort of the two things. I would say that there are some so everyone wants grants. Like, grants for free money, who doesn't? And we had a very unique circumstance with the IDL, in which it was small, but for the first time ever, there were like very accessible grants from the government. Grants make me nervous, because I would always view them as a cherry on top thing. Like, I wouldn't rely on them to be that's going to be the thing that takes my business off the ground. That's going to give me the capital I need to start up. That's going to be the thing that gets me through this hard time. There are a lot of work to apply for. And doing so, the work you put into that, you could spend all of your time applying for grants, and who's to say how it will pay off. And it's rare that they're there for large sums of money. So there are, we have sort of a compiled giant history of grants for small businesses, which is another link I will send you. We have one just like general small business grants. And then I believe we have a lot of women here. And so we do have a list that focuses on programs that are targeting women business owners. And there are some really good resources in there. And I think a lot of them tend to come with communities in some cases, which is also great. For loans, this is where I have a lot to say here, and I'm please everybody really listen to this part. A couple of things is that I think that I'm New York City based usually, and when people are starting a business, they jump to venture capital. And I think venture capital can be great for lots of reasons. It does not make sense for many businesses. Truly, venture capital is for businesses that have very, very, very strategic growth plans to grow quickly over a short period of time. You're in a place where you are diluting your ownership when you do something like that. And so you just have to evaluate, like, does my business model make sense for that type of capital? And do I want to give away ownership of whatever it is that I'm building? There's definitely businesses that make sense for, and there's many businesses it doesn't make sense for. And it doesn't have to necessarily happen the moment you start. That could maybe be at a moment in time. Let's say you're building you're an esthetician and you're launching your first location in New York. Like, you could franchise that or build multiple locations over time, and then you might seek investment capital there, but you wouldn't necessarily need that the first time about to test your theory. And so that's where I think loans are a really good option, because it's purely debt financing. It's non-dilutive. You're able to get the money you need invested in what you believe you should be investing in, see that return, pay it off. However, business lending is a scary place. And I say this because it's not as regulated as consumer financing. And therefore, you as truly a consumer here, as a business owner, can often be met with offers that aren't quite what they seem. And in particular with business financing, there is a way that people phrase pricing that makes it sound a lot more affordable than it actually is. So there's an example is something called like a factor rate or a buy rate, where it's, let's say it's a 1.25 factor rate, which in your head, you're thinking 25% interest rate, like, whew, that's pretty bad. But you know what? Meredith said business lending has more expensive interest rates, so I'm going to run with it. That's not actually a 25% interest rate. When you factor out into APR, we're talking in some cases triple digits, depending on the payment terms of the loan, if there are any other fees attached to it, like an origination fee. So we see people come to us all the time. Like, this is by no means what Fundera specializes in. Refinancing is where I'm getting. We specialize in being able to be that place of knowledge for you to say, I need money. What's my best option? We can take a view of your business and say, here's your best option. Let's prepare your application so you're able to have the highest chance of success. We have people who stumbled to us a few moments too late, and we're looking at somebody who, I'm not exaggerating here, hundreds of thousands of dollars they're overpaying per month. And that's the most extreme cases. But we've seen, you even talk about like how often we see people paying $10,000 too much a month in interest. $10,000 a month. Do you know, like, that's 2 employees, depending on where you're located. Like, that could be the difference between you having a salary and not having a salary. Like, the numbers we're talking about are dramatic, and they're life-changing. And that is why it's so, so important that you understand what you're getting yourself into. The other thing is that when you start a business and your information goes out, for those who have, I know your inbox is full of all your offers for financing and all your offers from like different service providers. I get these all the time. I find it hilarious because like my husband's my registered agent and he like gets this stuff. He's like, what is happening? I'm like, I know firsthand what business owners are getting hammered with. And it can be so easy to when you're desperate, to take the first call or take the first thing that comes across your desk. But too often those are things that are egregiously expensive. Now, the other thing I'll say to this is that there are some cases in which these really expensive options may be your only option. But you need to evaluate that. You need to understand truly what you're paying. You need to understand, again, it's all about investment. Maybe it's really expensive, but I believe in it enough that I know if I put this money in, I will get what I need to pay this back. Or working through this idea of I can do this now and potentially refinance it in the future. And I say this scenarios because often if you need money quickly, fast cash is usually expensive cash. So you may be in a scenario where you need to take on something more expensive, but you need to keep working on the process of like going back to those SBA loans, how you could potentially refinance that into an SBA loan. So that's my soapbox. So that's the last thing that's a bummer about business lending is there's not just one kind of product. and mortgage, car loan, student loan, they all kind of walk and talk the same, monthly payments, paid out a certain way, done. Not the same, not the case at all in business lending. You have loans that are either term loans, which have their traditional monthly paybacks. That's the loans you know very well. You get those through the SBA, you get those through the bank, or in some cases, there are a very, very small amount of online lenders that do these types of loans. Funding Circle is a great example of one of these. There are lines of credit, which operate like your credit card, but with cash. And you usually get those through your bank, or you get them through some online lenders. In many cases, some of these online lines of credit can be kind of expensive. So I would call those like medium tier products. Like I actually think every business owner should have a line of credit on hand, because you don't have to pull on it. You can get it, you can qualify for it, and you can have it. And then it's there. If you ever, going back to fast cash is an expensive cash, well, you've already got that line of credit backed up. So you can go pull on that, which will be more affordable. That's another thing, going back to like, if you haven't applied for PPP, do that when you get off here. If you need financing, if you don't need financing, don't do that. If you have a business, I would go sign up for a line of credit right now. Start with your bank. If you can't get it through your bank, come to us. We'll help you find some online options and you can look through the rates. Again, you don't have to draw on it. It's good to have it. So those are lines of credit. Then this is where it gets kind of crazy. There are lines of credit backed by certain assets. Going back to if you have inventory, if you have invoices, that's another one here. If you are a business who invoices for your services, you can utilize that to get financing, whether through a line of credit or just traditional, like a traditional lump sum of cash. And there's very like traditional invoice factoring companies, and there are some online movers in this space too that are quite interesting. And then you start to play with products that look like a term loan, but they're much shorter in length. They're much more expensive. You're paying back daily. You're paying back weekly. Those can be more expensive. You may see those more often. Those are easier to qualify for. And then the last stash is what's called a merchant cash advance, which is where lenders are taking a % of your sales to pay back the loan. So it's usually through your credit card processing company that you work with. And these make more sense for people who have a lot of transactions, like a restaurant is a really good example. But again, they're the most expensive product on the market, and you would never want to take that unless you've exhausted all your other options. And then with this product that you can afford this, and you can afford to pay it back. We see all too often people who've got 4 or 5 of these going and are just drowning in debt because it can get a little addictive because it can be so easy to access in some cases.
What about taxes here? So 2 questions. One person started her business a little while ago. So here, she said, I started my business last year in October. So I didn't file taxes last year because I wasn't required to. Will this affect my likelihood of being approved for the PPP, even though my business has been fully running with employees since launch?
That is, I say apply and see what happens. You need to show proof of payroll.
Okay.
And so I imagine that I would assume this person's been paying taxes on payroll, and I would also imagine they've got to have something unless they're paying people only as 1040s. So maybe this person could add a little bit more detail in the chat and I could provide follow-up there. But really what it's about is proof of payroll. Like if you didn't pay taxes because you didn't need to, that's totally acceptable. I think that, again, it's those 940s and 941s that they're looking for, as well as if you have W-3s, you can throw in for details, or if you have those payroll reports that a payroll provider has been producing, such as Gusto, ADP, and Paychecks, that shows it all right there for you. Those are the type of things that people will be looking for if you actively have employees.
Mm-hmm. Pablo asked a question about tax returns. So he has 2 years tax returns, but he said, I've not yet started making income because of COVID-19. Do I stand a chance for an SBA 7A loan? Will they request recent bank statements? My understanding, based on what you just said, is it's actually based on the employees. Is that correct?
So Pablo here is talking about the SBA 7A and not the PPP. So PPP is based off payroll. They're looking at your payroll to determine your loan size, because again, going back to the PPP was established to really help business owners have the capital they need to keep people employed. And then in the case of the 7A, this is the SBA's traditional loan. That is pretty much what it has been. Always great product, my favorite product for businesses. It is, however, been influenced by COVID. There are some things that have tried to make it more lender friendly, so people are more willing to do these SBA loans. And then in terms of every SBA lender is different. For the lenders we work with, they do require income, and they are verifying. A way they verify your cash flow is through bank statements. So that's something to be mindful of in this case. In any scenario, if you're curious, can I be eligible for something? You should just apply. And again, in these circumstances, we're happy to help, in the sense you come to us, you say, I want an SBA loan, you show us your information, and we're able to say, okay, we can't do this now, but when you do this, you would be able to. I will say this, one of the biggest hangups we run up with the 7A loan is actually the tax returns and somebody not having filed their taxes. And we usually wait for them to file and then we submit them. So in this case, Pablo has his tax returns. So that's one step in the right direction.
Mm-hmm. Rachel and Bonnie asked questions about independent consulting. No, so Rachel is, she's a small consulting business, is project-based, doesn't have employees. And right now all client projects and her salary, have stopped. So she asked, am I eligible as a one-woman show for a grant? I think yes, right? You're your own employee, but if you don't have, a lot of projects, what are you showing? Last year's, income, or how close to COVID, makes you eligible for the loan, and also the amount of the loan?
So in Rachel's case, I think she may be asking, I don't know if you're asking Rachel, generally for a grant. In that case, grant applications are all different. They all require different things and are looking at different things. And so there are definitely grants you're eligible for. I would just review the requirements and take a look. If you're specifically talking about the EIDL grant, you would be able to show proof of impact here, so you would be eligible for that, which is good. And going back to as long as you've got January and February and can show that cliff in March, you can take a serious look at these programs. And then in the case of, I think that's the answer to that. Did I miss anything on that specific question, Claire?
No, I think I got it. I mean, for Bonnie, she asked, how do I show proof of payroll as an independent contractor? Is that just your taxes?
So yes, but again, I know there's so much here, because there's this moment in time, we won't talk about these things in a year from now, PPP and EIDL, but we will talk about SBA 7A, et cetera. So again, EIDL is a grant and then a loan that has recently become popular given this current circumstance. PPP is a program for the moment in time. And since it is a loan amount that is determined based off your payroll and is primarily the idea is it will be used to fund your payroll. If you are an independent contractor, or if you are a sole prop and you are the only person on your payroll, you are still eligible for this program, which a lot of people thought they wouldn't be. And all you have to do is show that proof of payroll, which is then primarily through your 1040 Schedule C, where it is line 31, showing your income. The only thing that's tough is if that line shows negative as a loss, you would not be eligible in this case, because they have to come up with some way to verify this payroll situation. So that's the one thing I've seen run into a handful of times. People in the independent contractor or sole prop bucket is in that scenario, but that is correct.
Mm-hmm. If I was rejected before, can I apply again?
You can. I would just try to understand the reason why you were rejected. The reasons I've seen is that somebody somewhere else, again, has your E-Tran number, and you need to make sure that's not the case, because you want to figure out who that person is and work with them. And then the other reason might be you submitted a an average monthly payroll that was just wackadoo. So lenders were like, I can't even begin to verify this. And because they're processing so much, they may have moved on. Make sure your average monthly payroll is calculated correctly. Make sure you have the right forms to verify. Like going back to my experience processing PPP applications, you know, people definitely got creative and how they wanted to try to verify. We're a bit limited, and like lenders can only accept certain things. So make sure it's one of those correct forms from the 940, 941, the payroll report from your provider. In the case of sole prop, your 1040. You can add in your W-3s if you want, which I found to be a really good way to like double check things. And they're going to ask for things like business bank statements, your driver's license, little things like if they ask for the front and back of your driver's license, please provide the front and back of your driver's license, because guess what? If it's just the front, it's not going to get through automatic underwriting. So I would say absolutely, but like really try to understand why. The only other thing, it could be as simple as like your EIN was put in incorrectly, so they weren't able to verify you were in business. So I would just get really familiar with the application.
Bonnie clarified her question. So she said, I was asking about proof of payroll as it related to Ppp loan forgiveness. If I spend it on payroll, right, paying myself in the next 8 to 24 weeks, how do I show that?
So this is a great question. I would first and foremost ask your lender what they're accepting, because this is a weird one. And we've, in many cases, it's probably gonna be your bank statements and certain deposits into that, such as if you're a contractor and you have clients who are paying you directly, you'll be able to just highlight those in your bank statements. Or wait, no, this doesn't make sense. Sorry, you would just, it's going to be your bank statements. Apologies. I'm like going between actual application and loan forgiveness itself. It would just be your bank statements is what I'm hearing. But in the case of this goes back to something that I will bring up. If you own a business and you are operating out of your personal bank account, another thing you need to do right after this webinar is over is go get a business bank account. There are free, easy options. I mentioned earlier that one that I use Aslo, and I love Aslo just because it's like basic. Like I'm just running a small LLC. I don't need anything crazy, and it's no fees. But in that scenario, it helps me say like, this is a business transaction. And by moving it over to my personal account, I'm paying myself. And so hopefully in this scenario, this person, you had a business bank account, the money was deposited in there and you moved it over the way you would normally pay yourself, and you're showing that transaction. The other thing I will say to this, Bonnie, and I mean, I just will be honest, like with where I'm most confident, where I'm least confident, this is one of those areas where I'm less confident personally. And the webinar that I've spoken about a few times, where I said we assigned somebody at Fundera to be on forgiveness because it is that complicated. I would recommend coming to that and asking Justin as well, who will give you a much better answer than me. And but a good place to start in this specific scenario is with your lender.
That's a pretty good answer, because I don't know anything. So I'm like, all right, I learned. I mean, Aslo, I learned that, and Bonnie, when Meredith is talking about that webinar, we'll include the link when we send out the recommendation or the follow-up email. We've got, if you get an EIDL quote advance and are approved for an EIDL loan, would all of it be forgiven or just the advance?
So the advance is a grant, so it is technically, it's not like, this is semantics, but there's nothing to be forgiven. It was a grant. The EIDL loan is not eligible for forgiveness. It is a loan. It is a term loan paid back. Again, I think it's a 3.75% interest rate and a 30-year term. I would double check that, but which again are incredibly attractive terms for a loan. But that EIDL is not forgivable, which the PPP is. So that's the big difference there.
How do you recommend using the EIDL loan for, well, the question is, how do I use this properly for payroll expenses you need to cover? So what do we need to show for how we've used the loan?
Mm-hmm. So you don't need to show anything for the IDL. So that's going to be my guess, is that this person was talking about the PPP, and which, going back, is forgiveness all goes around your ability to prove you use the funds for payroll, you use the funds for utilities, rent, and a few other eligible categories. There are also some cases, depending on if your head count came down, wasn't able to go back up to the time, like basically did that money help you hire more the heads you had to let go. Going back, I'll say one more time, it's super complicated. Please come to the webinar so you can ask the specific questions about your business. I would say that generally, like, the bigger your business is, if you have like a clear payroll processor you're using that can show you paid out that money, it's pretty clear. You can show your rent check, you can show your utilities. Where it gets a little bit complicated is related to the bringing certain heads back if you let them go. And it's also it can get pretty math heavy in terms of like, at what point did you bring them back, and at what salary and over what time, based on when your forgiveness period kicked in. So that is why I recommend coming to the webinar, because of how specific this can get, and we'd like to be able to provide the best information possible.
We got a ton of questions that are specific to a certain industry or demographic. I don't know if you know any off the top of your head, women of color, grants that are available to them, or loans that are available to them. Where can we go to figure this stuff out? Because I don't want to get too granular here, because not everybody maybe has a beauty startup, but where would you recommend to go?
So again, I've got a resource I'll send around. We really do try to compile these things based on different communities. So we have a general business grants. We have a like loans for women, as well as grants for women. And then we also have some materials that are sort of a compilation of resources for minority business owners of color, that tend to be a bit of a mix between something like grants, financing, other just really good programs that are looking out for those for those different communities. Off the top of my head, there is a lender called Camino Financial that focuses on the Latinx community that does really good work. And then I believe there's a lender called Lendistry that focuses on serving minority communities. If you want two specific lender recommendations, and then I've got some really good resources. It'll be a lot more than the two lenders coming on the top of my head right now.
Great. In our last minute, general business advice. Somebody asked for the top 3 tips for a brand new business owner or someone just starting to help them set up a financially responsible business and not create unnecessary debt. So we'll end with your 3 tips.
Goodness. I'd say first and foremost would be to understand personal credit's impact on your business. And if you don't have a strong score, you get on that now. You make that a priority. You sign up for Credit Karma. If you're not already, you start to understand what goes into your credit score, and you work on that. The second thing is I would focus on, taking very affordable first steps. And I say this because as a new business, you can incorporate pretty easily through a service like InkFile or LegalZoom, which then you're like, how do I understand what my entity type should be? You can change your entity type. It's a lot easier than people realize. And I would say that you can get a pretty good gut check on these things by doing some light reading. My recommendation is generally you kind of can't go wrong with an LLC to start. I know I've got a lot of sole props in here. An LLC does help protect you personally and separate you a bit from your business, and you can still be taxed as a sole prop, which is it's considered a pass-through entity. And so looking at a cheap service like InkFile to do that, as well as then there's free business bank account options. You'll find it's we make a lot of lists. We do a lot of research and we make a lot of lists, but we've got a best free business checking account. You sign up for that business checking account. Say it again. If you're on this call, you own a business and you don't have a business bank account, please, they're free ones. Go sign up. And there's some really, really good options. The internet has done wonderful things to banking. You start there and get a business credit card. You can get a business credit card that is no annual fee, and has 0% intro APR for 12 months, let's say. And guess what you now have access to? You have a vehicle where you can finance portions of your business that is interest-free for a period of time as long as you make your minimum payment. So if it's like a $25 minimum payment every month, you can have that 12-month period for those initial small startup expenses. You obviously want to be very responsible with that. So that's what I consider like my lightweight starting up financial package. Like I actually do this with my friends all the time. I'm like, you go file here, you sign up for your bank account here, you sign up for this credit card here, and you've got like just what you need in place. On top of that, I'm a big, I really love QuickBooks Self-Employed that has a TurboTax plugin. It's cheap. It's $18 a month. You have what you need to invoice people and keep your transactions, and it will tell you what you owe in taxes every quarter, and you just file right there every quarter the amount that's necessary for you to pay those quarterly taxes. So that's like you're establishing a very strong financial base that makes your life incredibly easy, and you can always get deeper on each of those things. You can go find a different banking relationship. You can get into a more complex credit card. You want to build up points. You can upgrade your accounting software over time, but that will give you what you need to run the basics of your business. And then the third is you're doing it. You're being part of a community of people who are working through the same problems as you. For example, like people like Reddit gets a bad name in some cases, but like there's so many great conversations that happen on the small business subreddit there, where people are getting like really specific. Reddit can also be a place where there's not a lot of forgiveness given. Like I've definitely seen posts that are like, Fundera, what a joke. And I'm like, that really hurts my feelings. But for the most part, there's really good conversations and specifics. So you could go on and ask people like, what are you using for X? And you've got people listing out the product recommendations. And then participating in communities like this, where you can actually ask these like specific questions versus it's, I run a site that gives small business advice, and it would have to be somewhat general. Like it'd be very hard for us to customize everything to everybody's unique and specific challenges. So really find communities where you can ask questions is my third one.
Mm-hmm. And I wish I'd known you or Fundera when I started Ladies Get Paid, because I did two things that I would definitely not do now, which is I used my own personal account, credit card, because I started Ladies Get Paid by myself. It took me probably 1.5 to 2 years to go, I should probably get a business credit card, a business account. And second, I never took out a loan or a grant. I actually put it all on my credit card, and I went into $30,000 of debt. I was able to get myself out of it pretty quickly. I just didn't think I had any other options. So this is a very meta experience because I am absolutely learning along with you all. Last thing, which is I can answer it, which is somebody asked, I didn't catch the second website she mentioned. And when she says resources, how are we sending it out? So Diana, in response to you, I'm going to talk to Meredith after this. I'm going to get those links to resources that she suggested, including the webinar that's a little bit more specific to loan forgiveness. Look out for an email from me probably later today. It'll be coming from community@ladiesgetpaid.com. So make sure we don't go into your spam or promotions folder. We're over time. Anything else that we should know, Meredith, before I let you go? Thank you so much, by the way, for doing this. I know a lot of information that we're trying to pack into an hour where things are general, but also trying to be specific and straddling the chat and things that have been submitted before. So you were very flexible and wonderful about that. Anything that you want us to know?
My email is just my first name @fundera.com. I am more than happy to address questions specifically or direct you to a link or a person who may be better suited to answer a question. I spend my entire day trying to understand entrepreneurs' problems. So it really isn't a hassle for me. It gives me more perspective and ideas on content we can be creating or ways we could produce something that may be helpful. So don't hesitate. Really enjoyed this. These were really, really great questions, very, very specific. And I hopefully was able to provide some perspective, and apologize again for some of those I couldn't tackle head on.
Rachel summed this up really well. She said, awesome. This was so great, capital letters. And thank you for speaking about finances and business in a language I could understand. This stuff is intimidating. Again, lots of acronyms. We don't normally talk about money. I think it's very much a structure and an industry that has been made for men. That's a whole other conversation. Don't get me on my own soapbox about that. But that's what we aim to do here at Ladies Get Paid, is let's just break this stuff down and let's be honest about it, because it's hard. And having people like you to come on and just like lay it out for us in the most basic terms, no judgment. Thank you. Thank you to you, Meredith. Thank you to everybody who's on this call and for you all watching. Hope this has been helpful. It's been helpful for me, so I'm glad we did it. I took notes. And everybody, please, if you haven't already, join ladiesgetpaid.com/join, and then we can add you to our private Slack group, and that's where people are continuing the conversation, since there'll be continuous updates as the government figures this stuff out, and as we figure this stuff out. So have a wonderful rest of the day. Stay well, most importantly, stay sane, and hopefully we'll see you all on the next webinar. Bye,
Awesome.
everybody. Bye,
Thanks,
Meredith.
everyone.